Hi everyone! There are only 3 mistakes that prevent you from making money in Forex. Just give me nearly 10 minutes and I will show you why you are losing your money and how to fix it once and for all. Toward the end of the video I will tell you about the biggest mistake. I'm sure you make it all the time. I lost over $55,000 on one trade in 2022. Unwillingness to accept a small loss did its job. My position completely liquidated my entire deposit at that time. So the very first rule you should remember is to always put a stop loss. Let me explain a little bit clearly. Trading is a game of probabilities. We are looking for such trades and such setups where the probability of earning is much higher than the probability of losing. Moreover, our strategies mean that your profit should be bigger than your loss. And now, answer me a question. How are you going to trade if your loss is not limited? Maybe at the moment of making a trade you think, oh no, I will not put a stop loss. Last time the price came to my stop loss and eventually reached all the ticks, but without me. It's not your fault. It's just a trade with a loss and you should take it. You may have put your stop loss in the wrong place because you haven't enough experience. But you are not guilty of anything in this situation. It is normal. You make a mistake when you don't put a stop loss. The exception can be a strategy when your liquidation is your stop. Sometimes I do that when I need to increase my balance from $500 to $5,000. But I have been trading for a long time, and I can and I know how to do it. By the way, I have copy trading, so if someone needs to make 10x's to their balance, just write me using the link of the description and I will connect you to my account. The same vibe have situation when you don't want to fix your profits. So having a plan for trade, I mean there are presence of a stop and take is necessary if you want to make Forex trading your stable source of income. Or you can do as you do it now, lose a lot of money, a lot of time and still come to the same conclusions I've told you about. Moving on. Be honest with me. How often do you feel the urge to take a short when you see a sudden growth on the traded asset? It seems to me that we subliminally think that this is the best and most profitable entry point. But in fact, we catch falling knives when we try to take a short on a rising chart or vice versa when they try to guess the bottom when the asset or price goes down after the next report from the Federal Reserve. So the second mistake is trading against the trend. I'm sure that I have not revealed a secret to you, but for some reason each of you thinks that you are the smartest and you are able to take money from the market maker. I'll tell you one thing. My most profitable and outstanding trades were made exactly on the trend. They didn't have perfect entry point, or somewhere it may have already seemed that the market is overheated and it is not worth to go long. Maybe I should start looking for the short. No. My biggest losses are just on the contrary related to the attempts to predict the market reversal. These are liquidations and very big stop losses. That's why I advise all of the beginners and those who don't fix their profits from Forex trading every month to work with the trend indicators and signals. You can confidently enter trend trade after the retest of the horizontal level or use a moving average indicator and candlestick patterns to enter trend trade with a good entry point. When a market maker has a target, then no level or your brilliant plan for trade can stop him. Therefore, it is better to join this money mess than to try to trade against it. Often traders don't even analyze the older time frames to see the whole picture. It is not difficult, so why don't you do it? And now the most huge problem. Answer the question, how many times have you increased your position size because you thought it was a 100% trade or a super confident signal from a guru trader you subscribe to? No matter how many times it was, I'm sure that such trades were much more likely to lead you to another drained account balance than to the incredibly profits you're dreaming of. Trading is a place where the Murphy's Law often works, and I notice it on my own example all the time. Overestimating risks is another mistake that prevents you from making trading your source of income. You should not be sure of any trade more or less. the size of your position should be clearly calculated based on your stop loss. For example, your balance is $10,000, your risk per trade is 10%. It means that $1,000 you are ready to lose if you catch the stop loss. And $3,000 you will earn if the trade goes according to your plan. So how to calculate the correct Forex position size? Let's use the calculator. First, we need to know the size of our stop loss. To do this, we will use long position. It is a tool on TradingView website. So here we set a take behind the imbalance and the stop loss behind the previous imbalance. The size of our stop loss based on this figure, it is 172 pips. And of course we must pay attention to this parameter. So the next we go to the BabyPips.com website. Here we open position size calculator, write all of the parameters. So the size of our stop loss is 172 points. We choose a currency pair and calculate. And also we pay attention to the mini lot. It is almost 6 lots and it is the volume of our transaction. Of course, there are different situations and different strategies. But if we are talking about stable and long-term trading, not about balance acceleration, then only the elimination of these 3 mistakes will help you improve your situation. So thank you for watching this video. Please give me a like and subscribe to the channel if it was useful for you. Bye everyone!